You know, inflation is at an all-time high within the last 40 years. Just want to get your analysis on what you see happening within the next, couple months, quarter two, quarter three. Do you think we're heading into a bear market, major sell-off, or do you think we continue the bull run? Thank you very much for your time. Have a great day.
It is the market question du jour, and it comes as we kick off a rough start for the year for the overall market. The Dow down 1.2%, S&P 500 down more than 2.5%. And the real pain being felt right now in the tech trade, the NASDAQ dropping more than 5% to start the year. So back to Brian's question. Are we headed into a bear market, or will the bull run continue? Guy Adami, good evening to you. What a treat.
Sarah Eisen, how are you, Sarah? I am so excited. I'm fired up for this Friday night. Are we headed into a bear market? I don't know the definition necessarily. I don't know if it matters, but I'll say this. For a lot of stocks, Brian, as you know, they're already in not only bear market territory, but some of them are in crash territory. I'll say this. If you watch Sarah and Wilf between 3 and 5, she does an amazing job in interviewing these Fed officials and stuff. No, it's true. And
thank you.
The most important thing that's going on right now, in my opinion, is this 180 that the Fed has done. So if you don't fight the Fed on the way up, you don't fight them on the way down. I'll say this. We've learned about the resilience of the market. I think you're going to continue to see that. I think 45.30, which is about 120 or so S&P handles from here, is your level to take another look. I think Steve Grasso would concur.
Steve Grasso, do you concur?
Well, I never want to leave Guy hanging. So, yes, I concur on his level to the downside. But I also, being in the markets for as long as we both have been, the market always sets up to hurt the most amount of people at any given time. And what does that mean, Sarah? That usually the opposite happens. So if you're looking for 3, 4, or 5 rate hikes, you're not going to get them. So I'm going to go with, as I said on the other show, I feel as if inflation is transitory. Now, transitory is a very gray, opaque word. I still think we're in that transitory category. And if inflation starts to die down, then Chairman Powell is not going to be hard-pressed to do anything. He's not going to raise rates. He's not going to clear the balance sheet.
And that would be good for the market, right?
All of this all at once. It would be good for the market. So I think you're going to get a choppy, very choppy first quarter, and then you're going to see everything ignite again. And maybe it's not going to be the Pelotons or the Zooms or the really high multiple names, but in tech, you're going to get plenty of great value in tech, and I think those names will be bought again and lift the market higher.
Mike, how does this fit into your view of the market in the next few months?
Yeah, I mean, I agree with Steve here. I think that the area that people should be most concerned about is the part of the market that is already in a bear market. So some of the names he just mentioned and that we were actually just talking about in the prior half hour, I'm talking about the constituent stocks of things like the ARK ETF. These are the high-flying, high-value, sometimes pandemic-related names. It is the Pelotons. It is Zoom. And, things like that. Those are the ones you definitely want to avoid, in my view. I would think that the S&P itself probably isn't such a terribly risky place to be. Certainly, you sort of have to take a look at it on the basis of where rates are, not just trying to guess where you think they're going to be 3, 6, 9, or 12 months from now. So from that perspective, I think the S&P is probably solid. But, the higher flying end of the tech sector is probably the one that I'd want to avoid.
But, Guy, those aren't the only ones in a bear market, which is technically defined as 20% off the highs, right? You've got names like NVIDIA that are now 22% off the highs, Skyworks Solutions, Netflix 25% off the highs ahead of earnings. So are there good opportunities, even if you expect a choppy market, because of the damage we've already seen?
Look, I don't think the story in NVIDIA, Sarah, has changed at all, nor do I think the story in Netflix has fundamentally changed. What has changed, to your point, is the stocks. And that's actually a good thing if you've been looking for opportunities. And you're going to get it in the form of Netflix, I think, probably around this 470 or so level, which it found a bottom at numerous times before that huge run up. And NVIDIA, to your point, that story hasn't changed. The only thing that has changed, to Steve and Mike's point, is the inflation fears and valuations. People are now focused on that. But the NVIDIA story is real. I think you probably have another 5% or so on the downside. And then you step in again. The problem is it's going to look really scary, but you got to try to take emotion out of the equation.
Steve, so if you think that inflation is going to come down and the Fed isn't going to go through with all those interest rate increases, what parts of the market do you want to be in the underperforming parts of the market? I know you don't like the ARC or the super high growth, but technology, the mega caps, right. Or do you want to stick with a group like energy, which has really worked this year and worked last year as well?
So energy has done nothing, as you very well know, for 5 years and then just ripped. So you've had dead money just to get back to even for the last 5 years. There's pockets of energy, and Guy has pounded the table on Schlumberger, so kudos to Guy on that. But when you look at it, let's just pull out the NVIDIA story, or let's just pull out the semiconductor story. So if I don't think that inflation is going to be as bad going forward, what does that mean to chips? Chips are going to have a supply-demand issue. That's the way they trade. Right now, you can't get any supply. If that alleviates, you're going to have a glut of chips hit the market. Not only that, but just think about this, Sarah. What do companies do to combat the supply chain shortage? They overorder, so they front load. So I think we're going to be looking at the best of times for chips right now, and then you're going to see a lot of these stocks fall off a cliff.